Welcome to Are You Killing It, the podcast powered by Peak Performance Partners, where our mission is to help your business achieve success faster. I'm your host, Dr. John Ronaldo, and each week our team of business experts brings you the tools, insights, and strategies you need to kill it in your business. No fluff, just real talk to fuel your growth. So gentlemen, let's dive in. Welcome to another episode of Are You Killing It? You guys ready?
Oh, yeah.
They're always ready to kill it. I'm joined here by the founders and owners of Peak Performance Partners. I got Patrick Stewart to my right. I got Kevin Hernandez across from me.
Hola.
And Ricky Navarre. Welcome to all of you.
Thank you.
We're going to talk about an exciting topic for many, many people. Money. Yes.
Dude, I love money.
Yes, I love it. Don't we all love money?
Yes.
But do we love managing money? This episode we're calling Money Talks, Financial Management for Business Leaders. And this is something I know that you guys as consultants, as folks out there helping folks spend a lot of time helping business owners with money, because oftentimes people who start businesses are passionate about what their business is. And they're like, crap, I have to deal with money too? And so that's where we come alongside and help them out here, right?
Yeah, they just want to make money.
They want to make money.
I thought you were going to say people who wanted to start businesses started with no money.
Well, that too, probably, right? No, that's happening. So we've all been there before, I think. Okay, so Patrick, I'm going to start with you just because you're to my right.
Nice.
We talk about financial literacy, right,
Yeah.
for leaders. Why do you think it's important for any leader in the organization, certainly the business owner, to have some basic understanding of finances if they're going to succeed in business?
Yeah, because finances are the language of business. And unfortunately, pretty much nobody goes to school to learn that language that's in business unless they're an accounting firm. So we go in, either go to school or don't go to school, right? We start our company and our business because of we're good at a service or we've got a product that everybody wants. And then but the part of the business is the financial side of it. And so unfortunately, we don't enjoy that because, again, it's not our business. What business owners are great at is checking their bank account. And that's how they measure their business. Their mood goes up and down with the bank account. And unfortunately, that's not financials and that's not financial literacy. So in order to make that bank account grow, you've got to understand what are the levers that you need to pull and maneuver in order to make that bank account grow.
So Kevin, in terms of numbers, I'm a business owner, maybe I'm a department head, right? What are the key financial numbers that I need to be paying attention to? What are the big ones that I should be paying attention to and I need to understand?
Your P&Ls.
P&L.
Right.
Why are you throwing letters at me?
Yeah, profit and loss statement.
Profit and loss.
Right.
All right. What is
Your
the profit and loss?
Say that again.
What is the profit and loss?
Profit and loss is basically how are you making money? How are you making your money, and then how does that money work for you? And because I'll give you some examples later on in this podcast about people who had great financial structure, companies that had great financial structure and were able to grow and to bring us products that you and I use every day.
Would you say that the P&L is probably the most important financial document in a business?
It could be one of them.
One of them.
Yeah,
What
there's
are
several
some of the
ones.
others, out of curiosity?
Cash flow statement, right? Also, what is your margins? Your profit margins, I would say, is another good metric that you want to look at as a business owner.
I suspect there are some folks who are watching, listening, just kind of rolled their eyes and said, oh my God, are we really talking about this? Yes, we are. This is why we have this episode. Ricky, tell me about your sense of numbers. When you're out there dealing with businesses, what are you seeing most? How comfortable are you with all this? But what are you seeing most in those that you're coaching out there?
When it comes to the numbers, I would say that understanding P&Ls and understanding what Patrick was saying is like the accounting is the language of business, right? And so you want to be able to understand, hey, how much am I making and how much am I keeping? Right. And one of the things that people need to understand and kind of look at is, your expenses. how do you keep your labor expense, your product expense? These are the things that a lot of people, and kind of your efficiencies. So when you're looking at your labor expense, it's not just, oh, here's how payroll is, but what's your labor efficiencies so that you can drive, because every single person you're making, that's your human capital investment, right? And so you need to be that individual, right, whether or not they're revenue generator or not, should be driving to the bottom line, money of some kind, right? Just because they're not making the cash register ring, they're still being productive, buying your time back and doing, certain jobs that's going to help you. So it's all part of the financial equation, if you will, right? I'm not an expert at it, and that's why thankfully I've got a team around me. And that's one of the things that I would advise business owners, is that you want to learn enough to be dangerous, right? You don't need to go get an accounting degree, but if you don't know how to read the numbers, if you don't know how to make business decisions around it, by all means, come tap us on the shoulder. We have a financial coach that his entire world, and our team, we have a couple specialists that come in and show you and teach you how to understand those numbers when you don't. And there's no shame in it, because that's not what we're good at. I'm great at engaging with people and relationship building and doing trainings. That's my specialty. Somebody says, hey, let's go over the numbers. I'm kind of like, right? And if you're out there feeling the same way, you're not alone.
Well, that's a perfect example of knowing your strengths, right? Not everyone can go and hire a CFO right at the beginning, right? That's unrealistic, especially for a super small business or someone that's just starting out. But really understanding and knowing that, hey, numbers ain't my thing, so how do you begin to surround yourself with people where numbers is their thing? That's what I'm hearing from that response there. Right?
Yes. And I want to add one other thing that's important, is that, again, don't just pass it off to your accountant or your CPA or your a controller or your CFO who you will, and then just wash your hands of it. Like, well, that's not my thing. I don't want to know it. I don't know it. I don't need to know it. No, you need to have your arms around it. Like I said, enough to be dangerous. You don't have to be an expert in it, but you need to be able to know if somebody's lying to you, right? And you need to be able to check your margins and be able to say, hey, hold them accountable, because if not, then somebody can lie to you. And the other thing is, where most small business owners run into, is they say, hey, I have QuickBooks, I've got numbers, I can run a P&L, I have a balance sheet, but those numbers are inaccurate. And that's one of the things, when you ask me, what am I seeing out there? I'm seeing that 1 in 20 companies have accurate financials, and the reality is garbage in, garbage out. And if you don't have the real numbers, then you're guessing. And if you're guessing, you have no idea if you're going to be profitable or if you're going bankrupt tomorrow.
5% of companies know their real numbers. Is that what you're saying?
Yeah. Well, and I think more important what he said is 5% of companies have accurate financials. So, and I think that's a key point there, because what happens is, not only do they not know their numbers, but I think here's really what I want to say is, if you're one of those 5% that you know your numbers, you got your financials in order, you're using accrual-based accounting, congratulations. You're in the minority. If you're one of the 95% that you don't have your financials in order, you're not sure, you're not doing inventory on a monthly basis, you're not using accrual-based accounting, you're not running your company by your financials, you don't have normal reviews of those financials, congratulations, you're in the majority, you're not alone. So, but there's hope for you, and we want to get you into that 5%.
Okay. Mm-hmm. So I'm now figured out I'm in the 95%. What do I do? What are the first steps that me, a non-financial business owner or leader, should take to begin to get dangerous in my knowledge about finances?
So I would say besides call us.
Yeah, hire people for this part.
But no. I think
us.
there's a couple books I would recommend. And number one is and they're really easy. Number one is called Simple Numbers. And it's simply that. It helps you break down that profit and loss statement. And really, the three financial statements are profit and losses, number one. Number two is your balance sheet. Number three is your statement of cash flows, because that's going to show you how your cash is doing. And as we say all the time, growth sucks cash. I mean, we have companies that literally grow from 7 to 20 million and they can't make their payroll. And the reason is because typically they're having to carry a lot more, and they didn't go and get the amount of money that they need to make that carry. Mm-hmm. And so those are just some of the things that happen. But the business owner, he's just stressed out going, I must have a crappy business because I don't have any money in the bank. or I'm looking at my profit and loss, and then we'll come in, or they go, this was a 3-month payroll, and I'm stressed out. I don't have money to pay payroll. And we're like, well, that's because you're not running your accounting properly, and you're not looking at your business in the language of business. You don't have it set up right. So what I would say is this: get educated, simple numbers, profit first, and then start to demand that your accountant or bookkeeper gives you financials by the 15th of every month. And then make them review it with you for an hour. You got to start getting used to those numbers and what do they look like, and then are they right? But the first thing is, they're not set up. Typically, they're not set up right. And so, that's where you got to make sure, hey, your cost centers are set up right. If you've got a cost of goods sold, everything that's in that cost of goods sold is set up properly, so that when you're looking at your numbers, you're able to make some type of sense of it, and you can compare, a month over month or year over year, and it makes some sense.
I think that's a good point, Patrick, because to his point, most businesses get started by running their business by their bank account, right? It's how much cash do I have in the bank? And this as sooner that you can transition your financial structure from a cash accounting to accrual, you're in better shape, and you're able to start making decisions based on your financials.
At what point should a business leader, business owner have the conversation about making sure like the chart of accounts is accurate, and then the systems, right, for tracking that? Because, certainly individual contributors get annoyed by, I got to fill out a reimbursement request or an invoice, or I got to get whatever, all that stuff in place. And we do all that for tracking purposes to make sure it's all tracked, into the right chart, right account. So what does that system look like? When should I start implementing those types of things? Where do I get a good set of chart of accounts that I should be following from? Because does QuickBooks automatically give that to me? Tell me more.
Yeah, QuickBooks has it pretty much set up. Yeah. I mean, it's a turnkey system for the small business. So when you're starting your business, go get QuickBooks, get the smallest, subscription, and start there, because that will help you to put the right revenues in the right categories. If you have multiple streams of revenue, you want to have them separated in category. And then obviously the expenses, it helps you to start tying the expenses. And if there's a cost of revenue, what cost of goods sold. So if I sell a pair of glasses and I sell for $10, but it cost me $5, I need to tie this cost directly to that revenue that came in. So that's where the chart of accounts will come in. But QuickBooks will walk you through a questionnaire when you're first starting. Go through that questionnaire, fill that out, but then get a bookkeeper that's looking over your books and reconciling your books. And again, it's not an expensive. You can get them fairly inexpensive at first because you don't have a lot of transactions. And then if you have it set up properly, then as you grow, it's going to be able to grow with you.
And I think you start, right?
Yeah, and I think to that point, what trips up business owners is, speaking about bookkeeping, is when do I use a bookkeeper versus a financial officer, right? And then from a financial officer, what is my CPA? Like we see this a lot in the community. Business owners get confused as to what entity they need to be using, and at what point do they need to start switching from a bookkeeper to a financial officer, and furthermore.
So expand on that then, because there are folks listening is like, I don't know, so bookkeeper seems to be the first step, right, for a lot of folks. So what is the role?
Typically the first step starts with the business owner. When they're starting that business, they're the ones that,
or
first
their wife or sister
or friend. Yeah, that's exactly right. And that's what we run into, right?
Yeah.
And so, and typically what we see is, they get a subscription to QuickBooks. It may not be hooked up right. It may not be reading right. Their chart of accounts within QuickBooks is not right. And so that's where we come in. I'm just going to say we come in and we actually take a look at the structure of where you're at, because then to get those accurate financials, you got to start from the beginning and make sure that everything is plugged in right.
So we start off wrong.
We start off wrong.
And that's very common is what I'm hearing, right?
Yes.
So that's a problem. But then,
95%.
95. So then we come in. So what role does a bookkeeper play? Okay, so I'm the business owner. I'm finally grown enough. I've got some space for a bookkeeper. What is the role of a bookkeeper? Is there a dollar amount, of profit that I should be hiring somebody, or is it just tell me when I should pull that trigger?
Yeah. Go ahead, Patrick. Because
I think it's making sure that you're set up so you're taking the time. So the two resources that are limited always is time and money. So making sure that you're taking your time and your money. So if you're go hire a bookkeeper, say, hey, set this up for me properly. They should be coming in probably initially on a quarterly basis, doing it, making sure they go in and reconcile to your bank account, to your QuickBooks, so those are equaling out, and then that you're running, you have the right chart of accounts set up, and that you're able to look at the profit and loss of your organization, and is that accurate? Because that's the thing is, we've had companies that will go in and they'll be like, well, we've got a $750,000 profit, but we have $5,000 in the bank. Okay, well, something's wrong.
Absolutely.
So obviously it's not accurate, and why is that, right? Yeah. But that's why that business owner, if you get into the rhythm, we call it the rhythm of meetings, where you're telling your bookkeeper so I would say this, first you're going to start with a bookkeeper, usually an outside bookkeeper, and it could be a family or a friend, but you're going to start off. I would say once you start to make, a couple $1,000s of profit, it's time to go invest in a professional bookkeeper. And then once you start to get, to probably $5,000 to $10,000 in profit a month, you need to go to an accountant, a CPA firm, and get them doing your books for you. And then once you start getting up into the hundreds of thousands, a month in profits, that's when you want to bring things internal. You want to bring in a CFO, chief financial officer, and start setting up your internal accounting team
process. And it seems to me though that there's always going to be potential errors, obviously, in the recording things. I remember I was part of a $7 million organization. I would meet with the CFO quarterly to review my budget, expenses and revenue. And inevitably there would be some random number in red in the expense. I'm like, what's that? They delve deep with their magic Excel sheets and stuff because I'm not that person, right? They delve deep and they say, oh, that's for this. Like, that's not my department, right? And inevitably it happens. So it's not even my department, right? So, that quarterly review was actually really helpful. At that size, we weren't doing it monthly because it was just too many meetings, right? But quarterly was kind of a perfect pathway to kind of do the review. But again, even though we had a whole financial team, there's always were some sort of error and things get misaligned somewhere, and so that's always part of the reality. You guys mentioned a lot, a couple times anyways, cash basis versus accrual. Can you explain to dummies like me the difference between the two?
Yeah, probably the best example is going to be, so if you're selling anything that there's inventory, when you go buy that inventory, so again, I'll use these glasses for the example. So I'm going to go buy 100 glasses, and I said at $5, so I'm going to spend $500. Well, if I'm selling, let's say 10 of those a month, I now have an inventory. So if I'm doing cash-based accounting, that $500 is going to hit that month that I bought these in because the cash went out of my account, and so therefore it's going to show as an expense in that month. But it's not really an expense that month because remember when I said this expense is going to be tied to the revenue. So when I sold the one, I'm going to take that out of inventory. So now the inventory is your bank. I went into one company. It was I won't tell what industry it was, in the automotive industry. And I literally walked into their warehouse and I go, holy smokes. I'm like, how much inventory do you have here? And he goes, I don't know. I'm like, well, what would you guess? If you had to guess, he goes, 700,000. I go, yeah, 700,000 when you bought it, but if you got to go replace that part right now, it's probably $1.5 million, maybe $2 million worth of inventory, because costs have gone up, right? And he's like, well, yeah. And I go, this is a bank account. And he goes, that's what I told my guys. And I go, this is literally, you have your bank account with cash. This is another bank account. We've got to do inventory of all this items so you know exactly. This is $2 million. If you had $2 million in cash, you sure would know how much you had. And I said, it's the same thing, just because it's now a product. And that's why the accrual is so important, because now the revenue is going to follow the expense, or the expense is going to follow the revenue. So now I know, what am I running my business at? And that's why the accrual is based. Or another example that every business owner here can, I said it earlier, this was a 3 payroll month. Okay, well, 3 payroll month is going to triple your cash. So you're going to have a 30% higher expense in your cash line that month. But really, on an accrual base, they would just even that out over 12 months, and it would be even. So if it's, if you're spending $120,000 a year, it would just show $10,000 every month, instead of these 3 or 4 months where you have the 3 pay periods, and it spikes your expense, and the business owner's like, oh my gosh, I didn't have enough cash, so it just helps them.
Or I'm not going to make payroll.
Yeah, it helps them even out their business so they understand it better, so they can manage their business appropriately and not on these knee-jerk expense items that, oh my gosh, I had to buy a bunch of inventory, I lost a bunch of money. Well, no, you didn't lose a bunch of money. It's, instead of your bank account,
It's in your inventory.
it's in your bank warehouse.
Which it could still raise in price if the cost of that product goes up, right? And so in terms of that, what I'm also hearing is that you should pay everybody twice a month, so you don't have to worry about the
There's that can make
that
a little bit
philosophy,
easier. Yeah. But the other thing that I also wanted to say is this, because again, this could be a 5-hour long podcast. When you go to sell your business or exit your business, the first thing they're going to tell you is, send me 3 years of financials, send me your most recent balance sheet, and send me your statement of cash flows. And the minute those reports are not accurate, you just lost money. And to the tune of 1 to 3 times what they would pay you. So you're just, that's why it's so important to have it when you're starting out. And if you're not there yet, what I would say is this: make it in your strategic plan. Hey, we're going to get our accounting in order so that we're running our business by our accounting reports.
So make a plan of it, right? Create some goals.
And I'm going to throw this in there, that almost every business owner is probably asking or thinking is, how do I pay my fair share of taxes, but not pay more than I need to, right? And at what point do you get with your CPA? Because a lot of business owners, they wait till the 11th hour and they just use a CPA to file taxes. And then they end up with a big tax bill because they didn't leverage that advisor the right way. And so you want to be starting to have that conversation, but they can only give you, if you have a bookkeeper or you give them the information you give them, they're going to take what you give them. So if you come into them, have that conversation too late, they're just going to go off of because they believe your bookkeeper did the job right. And so if you're looking for someone to help you again with those financials and make sure, our financial coaches, they go in, the first thing they look is, and they say, give me those 3 reports, give me 3 years, and we look at the reports. He's like, yep, these aren't accurate. And you'll know real quick if you want somebody, right? That we do it for a fee, but I guarantee you it will save you a headache and a half, and the amount on, it's just good business advice, because you want to make sure you're running your business lean, being as profitable as you can, right? Pay the taxes that are fair, but don't overpay and don't just leave money on the table. Every business, especially when you're starting off, right? We don't, again, it's not about cheating the system, but it's about being wise, and you got to know your numbers.
And starting from the beginning. I mean, that's what I'm hearing, right?
Try to get ahead of it.
Sooner that you
spreadsheet
start.
it starts with an Excel spreadsheet.
Yeah.
First and foremost, right?
Yeah. And getting all that in order at the beginning. So hopefully we gave you guys some things to think about in terms of this. Patrick already said it. We could talk about this for 5 hours, and we've done training, and we'll do training on this particular topic in the future as well. So Continue to know that Peak Performance Partners are your coaches willing to walk alongside you guys and help you guys through all of this. Just check it out at 3-peak.com for more of that, and continue to subscribe and follow us on social media so you can hear about all the ongoings of the good work that's happening here at 3Peak. With that said, gentlemen, thank you again for another great episode of Are You Killing It? Talking finances. We're going to make this happen. All right, wishing you all a great day. Take care, everyone.
Adios.